Welcome to this week's African Agri Overview. This week we'll be focusing on the Zambian soybean and soy meal markets and our price expectations going forward. We also take a look at the poultry and grain prices over the last month. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview. Before we dive in, I'd like to encourage you to follow us on YouTube. By doing so, you'll gain access to regular insights into the agricultural markets of Africa. Our goal is to provide you with valuable information that can help navigate the dynamic world of agriculture on the African continent. You can also contact our regular market analyst, Jacques Pienaar, for more detailed reports on the African soft commodity markets. Now let's talk about the latest news in the global economy. Although Brent oil prices decreased slightly over the last week, now trading on $94 per barrel, it remains on very high levels due to stronger demand, especially from China, and then lower supply from OPEC, which continues to drive this price upward. The kwacha also stayed on weaker levels and is now trading on 20.9 kwachas per US dollar. These two factors combined will result in higher fuel costs and most likely also higher food inflation as well. Looking at poultry prices, the prices increased due to this weaker exchange rate and better export demand as a result. The day-old broiler price stayed sideways on 15 kwachas per head, while day-old layers stayed on 15.5 kwachas per head. Live layer cull prices however increased to 54 kwachas, while live broilers increased sharply to 100 kwachas per head. The average egg price also increased on the back of this better demand, now trading on 52 kwachas per tray. The latest maize price in Lusaka traded on $368 per metric ton, soybeans on $435 per metric ton, with the latest soy meal price now on $450 per metric ton. Wheat prices decreased again, now trading on $530 per metric ton. Jacques Pienaar, our regular market analyst, will now discuss the latest news in the Zambian soybean market. Over to you, Jacques.
Good day and thanks for joining. Since our last Zambia soya complex discussion, not much has changed in our S&D forecast. However, soya bean and soy meal prices have been volatile, moving significantly higher from late June to middle August and giving back some of those gains since. Obvious question is which direction prices are likely to take from here. Let's do some analyzing. Our balance sheet forecast for 2023-24, the current marketing year, remains more or less unchanged. We expect a record production of 600,000 tons, local crush of 520,000 tons, exports of 100,000 tons, and ending stocks around 100,000 tons. A relatively healthy balance sheet. What we would like to emphasize again is during 2022-23, the government bought 100,000 tons of soybeans for strategic reserves through the FRA. Due to the unrealistically high selling price for this stock, it remains unsold. The market guess, traders, speculators and farmers could be sitting on another 50 to 80,000 tons. This position, together with that of the FRA, makes up 30% of our expected crush this year, and observers indicate crushes are already well stocked and government at this stage slow to issue soybean export permits. We do not expect a shortage of soybeans in Zambia before the next crop should harvest from April 2024. The next graph shows price history of Lusaka soya meal, soya bean and crude soya oil import parity from Argentina. As indicated in a previous podcast, Zambia is a net importer of edible oil and therefore import parity is the benchmark. Both the soya bean and soya meal prices increased significantly, around 40% from late June to mid-August, as indicated by the blue circle. The reason for this price support remains difficult to explain and not fundamentally backed. It made Zambia soybeans too expensive for the deep sea export market and made soya meal too expensive to export to South Africa and Tanzania, typical export destinations. Since mid-August, prices for both soybeans and soya meal did soften to an extent, with soybeans currently trading at $435 a ton and soya meal at $450 a ton in Lusaka. However, prices remain uncompetitive for deep-sea soybean exports and soy meal exports to South Africa and Tanzania. Mid-August, the Zambia government suspended the issue of soybean export permits after lobbying by the Crushers and Edible Oil Refiners Association of Zambia. The government has since started to issue export permits again, but only small volumes moving to Zimbabwe. Not much soy meal exports either due to relatively high local prices. Zambian crushers are waiting for the Zimbabwe market to open, Zimbabwe not issuing soy meal import permits yet. Zambian soybeans and soya meal basically priced on Zimbabwe export parity. So the question is, can exports to Zimbabwe support the Zambia prices at current levels? The market feels Zambia will need to sell their substantial surplus soy meal stock. South Africa should be their main destination, and for that they need a soy meal price of around $400 a ton versus the current $450 a ton as indicated on the graph. Relatively good edible oil prices could allow crushers to subsidize soy meal prices to an extent. However, eventually lower soybean prices will also have to contribute to the soya meal export campaign. However, if Zimbabwe can absorb the exportable Zambia soy meal surplus, the Zambia soybean and soya meal price could move sideways short term. We could be wrong, but are a bit skeptical if Zimbabwe can take up the entire mentioned surplus. Another factor that needs to be considered is the large soybean position being held in Zambia by the FRA and traders, which could still have a negative impact on prices short-medium term.
Thank you, Jock, for sharing such valuable insights. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jock Pinaar. I'm Dr. Johnny van der Merwe, and thank you for watching. Remember, for a deeper understanding of the ever-evolving African agri landscape, stay connected with us. Thank you for watching, and until next time.